As for the markets, Tom Piotrowski from CommSec. Hello, how do we open up today?
Pete, we're going to take a bit of a knock when we kick off later on this morning. Just over the course of the last hour and a half, we've seen local SPI futures sell off quite aggressively, losing the better part of 4%, reflecting the volatility that we've seen over the course of the US session in particular. And as Ed suggested, the back end of this week is replete with a lot of economic news, but particularly the investment community will be focused on the producer inflation numbers and the CPI numbers, which will be released in the US. So specifically, the core numbers here are anticipated to be on the high side of things. And that's why you have seen interest rate markets overnight nudge the highs that we've seen at the end of September. That unseated stocks, we saw a lot of volatility overnight where US equities were concerned. The S&P 500 at its worst was down by about 1.25%, reclaimed all of that ground. It was up by 0.8% at one stage, but then sellers got the better of things at the end of the session. The index finished down by about 0.7%. So a big range, and that reflects the anxiety ahead of those important inflation figures. And then on top of that, we've got minutes from the US Federal Reserve meeting most recently. We've got Chinese inflation numbers. A lot of moving parts, Pete. So that's why volatility is going to be par for the course in the next couple of days. UK markets in particular last night, very volatile as well, down by about 1%, but we can talk about that
pretty much sums up the year, Tom. It's been a volatile year. I think, as you quite rightly predicted in January, you are the oracle here. Tom Piotrowski.
I think a Year 10 economics student could have predicted that, Pete, so that's not particularly illustrious.
This is why I and many others have got more grey hair this year, for the hair that remains anyway. Thanks, Tom. We'll talk to you later on.